Welcome back to this explainer. If you are gearing up for a big exam on national accounts and you need an absolutely rock-solid understanding of net factor income from the rest of the world, well, you've hit the jackpot. We're going to break down every definition, rule, and data limitation straight from the official National Account Statistics methodology. No fluff, just exactly what you need to ace this. So here is our game plan. 1. Defining net factor income. 2. Components of net income. 3. Who is a resident? 4. Data sources and methodology. And 5. Quality and data limitations. Let's get right into it. Starting with Section 1, Defining Net Factor Income. Okay, the absolute most important thing to remember here is the word net. In economics, net is always just a simple math equation. What comes in minus what goes out. So net factor income is literally just the receipts of current income earned by our residents from abroad minus the disbursements of current income paid out to non-residents. That's it. Receipts minus disbursements. Burn that into your brain for test day. And if you're wondering where these official numbers actually come from, the National Account Statistics points directly to the Reserve Bank of India, or the RBI. They compile all these cross-border transactions and publish them in the tables for India's overall balance of payments. That is your baseline source of truth right there. All right, moving on to Section 2, Components of Net Income. You absolutely have to memorize these two distinct buckets. Every single piece of factor income falls into one of these. First, you've got human labor. That's the net compensation of employees. Second, you have capital returns, which is net income from property and entrepreneurship. And just a heads up, that second bucket is pretty broad. It covers interest, rent, dividend, profit, and, definitely don't forget this part, the reinvested earnings of foreign companies. This creates a really stark contrast when we look at national accounts. Think of it entirely in terms of directionality. When residents living in the country earn factor income abroad, that's an inflow. It's actively adding to the national wealth. But when non-residents earn factor income inside our country, that's an outflow. It subtracts from it. So again, inflows minus outflows gets us our net. Which brings us to Section 3, Who is a resident? Now, this is a massive trip-up spot for students, so listen closely. The official rule of thumb for residency is a two-step test. Number 1, a stay in the country for 1 year or more. Number 2, your quote-unquote center of interest has to lie in the country's economy. That basically just means you're actively participating, producing or consuming goods and services on a long-term basis. And this applies to individuals, businesses, you name it. But wait, here comes the classic exam curveball. Embassies, consulates, and international agencies are not treated as residents of the country they are physically sitting in. An international agency belongs to an international area. An embassy belongs to its home country. So if there's a foreign embassy right down the street in your capital city, economically speaking, that is foreign soil, and its transactions are logged that way. Let's jump to Section 4, Data Sources and Methodology. So how do they actually track all this cash? Well, the main database is the General Balance of Payments, compiled by the RBI, which they do quarterly and annually. But the RBI can't see absolutely everything. That's exactly where the government and its various agencies step in to provide supplemental info and fill in the blanks. It is a massive team effort. Oh, and for the methodology deep dive, which you'll definitely want to know for the test, when calculating estimates at constant prices, specifically based on the 2004-2005 series, they use what's called the single deflation method. Basically, they take the implicit price deflators of the service sector and apply them straight to the current price estimates. Jot that down. It's a great technical detail to pull out to show you truly understand the mechanics. Finally, Section 5, Quality and Data Limitations. To really master this stuff, you have to know where the data falls short. Not everything makes it into the RBI's records. Things get missed mainly in two ways. First, if a transaction completely bypasses an authorized foreign exchange dealer, the system just doesn't see it. Second, transfers that don't involve actual money moving, like direct foreign aid or government settlements abroad, those are entirely missed by standard foreign exchange records. That's why that supplemental government data is an absolute lifesaver. But there's also a highly specific, totally fascinating monetary threshold that creates a real headache for the RBI. 5 lakh rupees. Let me explain. Here's the deal. On the receipt side, so money flowing into the country, if the inward remittance is under 5 lakh rupees, the person receiving it doesn't actually have to state what the money is for. So the RBI gets this cash flowing in, but they're totally flying blind on how to categorize it. To fix this, they actually have to go out and conduct separate periodic surveys just to estimate how to classify these smaller receipts in the balance of payments. What this does is create a massive asymmetry in the data. The receipt side is fuzzy. It relies heavily on those surveys for amounts under 5 lakhs. But the payment side, the money going out, that is incredibly strict. If you're sending money out, you have to provide full transaction details no matter the amount. So, on the payment side, the RBI faces virtually zero classification problems.
So, I want to leave you with this to chew on. If unrecorded transactions can just slip past the central bank, and incoming funds often require guesswork and surveys, how might that alter our perception of a nation's true economic reality? Keep that in the back of your mind as you finish your prep, because understanding the real-world friction and the flaws in the data is what separates a good student from a great one. Thanks for tuning into this explainer. You've totally got this. Now go crush that exam.